Let's be clear, this is not an IPO.
No, it is not. So today, Slack confidentially filed for a proposed public listing, which is sort of filing speak for a direct listing. So direct listing, for those of you who are not familiar with this, is essentially when a company lets its shareholders, its employees, and early investors sell their shares on the public markets, but it doesn't go through the traditional IPO process of using underwriters and big banks to do a whole marketing campaign for them in a roadshow, and essentially allows the early investors to get liquidity in the employees without generating more cash for the company, which creates a lot of dilution.
So this is something that Spotify did as well. It is unusual. Why is Slack going this route?
Well, they're going this route for two reasons. Mainly because they already have a lot of cash. They're sitting on a lot of cash right now. And they don't need the marketing or the PR, the publicity, the recognition that comes with the traditional IPO. They really just want to give their early investors and their employees some liquidity.
And also, they can sell the shares right away. There's no
right. There's no lockup, and the biggest reason is it doesn't create dilution. I mean, that's huge for a founder. They don't want to dilute their shares and bring in all this cash that they don't necessarily need.
So, what are the risks? Potential risks?
The jury is still really out on this. Spotify had a very successful listing. I mean, their shares as of today were down 6% from the day that they opened publicly, but that's normal. I think that some people have said there's a risk that the shares could flop on opening day, and you don't have the underwriters to sort of prop up the price of the shares and to guarantee it. But if the banks do their job, and there are experienced bankers working on this, we understand Morgan Stanley and Goldman Sachs and Allen Co., and they did Spotify's direct listing, they should do a good job leading up to it of really getting the right price for the shares, understanding on the supply side what people are willing to sell for, and understanding on the buy side what people are willing to pay.
What about the chance of a government shutdown, another shutdown? I mean, we've been talking a lot on the show about how, the initial shutdown stalled things at the SEC, could have perhaps slowed things down for Uber and Lyft.
Right.
We don't know. We don't have any concrete details on whether the process actually slowed down, but it certainly has the potential.
I mean, it definitely slowed things down. There's a huge, huge backlog at the SEC right now. I think there's sort of this sense of like a boogeyman waiting in the wings. What's going to happen next week? It could delay things even further. We understand that the SEC is just proceeding, as everything is normal, and there is a backlog, and they're just going to get through things. I mean, Slack has said that it will. Actually, they haven't said this. We understand that Slack is planning to, aim to go late spring, middle of the year. So, I mean, it shouldn't delay things too much if there's another, shutdown, unless the shutdown goes on for months and months, in which case everything will be delayed.